Yes, in short, the country's tax revenue is barely touching 1,000 trillion, only grew by 1.6%. We can say this as sluggish movement because compared to October 2018, which was last year, it reached 21.3%. Therefore, in this infographic segment, I would like to present to you some data about the trend of tax revenue in Indonesia. First thing first, let's talk about Indonesia tax revenue journey. This is Indonesia's tax revenue. In November 2018, the tax revenue reached 1,136 trillion rupiah, and in December, 1,315 trillion rupiah. As you can see, from January to until May, the number was pretty much in a slow trend. And in October 2019, the Indonesia's tax revenue reaching 1,173 trillion rupiah. This one is taken from the Ministry of Finance. As the data shown, the dynamics of the global economy are already felt in the domestic economy. One of them is the sluggishness of tax revenue. In addition, Minister of Finance Sri Mulyani delivered another statement that tax contributions from various business sectors showed slowed down as well. For example, the mining sector contracted 13%, while last year it could still grow significantly, 71%. This is a sign of an economic downturn. As he said, this unfavorable condition, of course, have reasons behind it. So what are the reasons? We can see through the next graphic. This is the list of the reasons behind sluggish tax revenue of Indonesia. The first one is negative performance of value-added tax and sales tax on luxury goods, and weakening export-import, weak performance of domestic industry, and rupiah depreciation. Some reasons affect deeper than other. For example, decline in export performance, referring to January to October 2019 trade balance data. Exports and imports fell compared to the same period last year. However, the decline in exports was recorded deeper. Automatically, VAT output is getting lower. There should be actions from government to keep nightmare scenarios away. Reason is, it only takes 2 months to end 2019, while our tax revenue is still far from the target. How much is it actually? We can see through the next graphic. This is tax revenue, current and target. The current target is 1,173 trillion rupiah, or only reach 65%. The total target, hopefully, will achieve 1,557 trillion rupiah. In short, total tax revenue from January to October this year was recorded at 1,173 trillion rupiah. This number is still 65.7% of the target. 2 months left to chase. Will government make it? Good news is, there is optimistic answer of the question. Finance Minister Sri Mulyani Indrawati believes at 2019 tax revenue target will be achieved, although she didn't deny that the Indonesian economy is currently under considerable pressure. To achieve this year's revenue target, the Director General of Tax did not issue brand new policies, but instead it will continue to existing policies and several supervision actions. What are the actions then? We can see through the next graphic. This is the list of government action towards down tax revenue. The first one is improving management quality of Directorate General of Taxation, increasing tax education counseling, and enhancing tax transparency through Finance and Development Supervisory Agency, or BPKP, Audit Board of Indonesia, BPK, Corruption Eradicating Commission, or KPK, and Indonesia Stock Exchange. Other than that, the Directorate General of Taxation has instruments to improve compliance and encourage public awareness, such as better use of data from AEOI, better service and guidance, including intensifying SMEs' final income tax, also monitoring law enforcement on target. For information, tax ratio is a percentage of tax revenue to gross domestic product, which is also one indicator to assess the performance of tax revenue. Too bad Indonesia may not be the country with the best tax ratio. Even Indonesia has the lowest tax ratio in Asia Pacific. And to get the clearer comparison, let's check the next graphic. This is tax ratio in Asia and Pacific. New Zealand, the tax ratio reaching 32%, Japan 30.6%, Solomon Island 25.3%, Philippines 17.5%, and Indonesia only reached 11.5%. In a publication entitled Revenue Statistics in Asia and Pacific Economies 2019, the OECD revealed that Indonesia's tax revenue is the lowest when compared to the other countries in the Asia-Pacific region. The data used by the OECD is the 2017 period data. Based on OECD publication, turns out that Indonesia's tax ratio has actually dropped. In 2017, when Indonesia's tax ratio was 11.5%, which was the lowest in Asia-Pacific, there was a decrease of 0.5 percentage points compared to the position in 2016. In 2016, the tax ratio was at the level of 12%. Minister of Finance Sri Mulyani Indrawati also said that Indonesia's tax ratio is below regional and global standards. Therefore, government still have many works to do to fix Indonesia taxation. And although government is on high alert over a possible increase in tax shortfall this year, we hope nothing but the best for Indonesia taxation. Stay tuned on Market Headlines because we'll be right back after the break.